Shares of Apple, Don pointed out, are lower this morning. The company announced it won't meet its quarterly revenue forecast because of lower iPhone supply globally. Also factoring in demand resulting from the coronavirus outbreak. Joining us now, Daniel Flax, senior research analyst at Neuberger Berman, and Will Power, not kidding, senior analyst at Robert W. Baird. Start with you, Dan. It's supply related. That makes it more palatable for you?
Joe, I think that does make it a little bit more palatable. I think what's important here is that people are demanding the devices which are innovative. The ecosystem remains healthy. Newer growth drivers like wearables are doing very, very well for the company. And so this is, of course, tragic for China and the people globally that are being impacted. But we see it largely as supply related and, of course, a little bit of demand impacted in China for the company.
I mean, they went out of their way to talk about the stores being closed and when that would when the demand could be satisfied. But you think demand, as long as that stays solid and it's a supply issue, that the long-term story remains intact. So we shouldn't be that concerned.
I think it's something to monitor, and we're, of course, watching it very, very closely. But I think if one steps back and just thinks about the longer-term story here, there are a lot of things that we think are attractive. The products, the iPhone, clearly, the wearables, the services business is growing very nicely, gives Apple incremental visibility. So we like the story here.
Will, the long-term fundamental bullish case remains intact for you as well?
Yes, Joe. Good morning. Thanks for having me. Yes, I'd agree with Daniel. We think this has been an ecosystem story for some time. We think that remains very much intact. You've still got a services business that's growing mid-teens. You've got a wearables business that grew north of 30%. I think, Joe, one of the key comments out of the release last night was that they're still seeing very strong demand outside of China. Expectations still in line on that front. So this really hasn't extended beyond China. Obviously, a terrible human toll, and what we think ultimately is more of a temporary impact for both the supply chain and a Chinese demand impact side.
So what's the most important thing, Daniel, when we can see that this is going to ease? What would be the data point that says, OK, we're back on track? It's going to be a supply data point?
Joe, I think we're going to get information from Apple's suppliers. We're going to have a better understanding of the people who are working in these manufacturing facilities, that they're coming back to work, that travel within China is beginning to get back to normal. I think from a component, the physical component side, I don't think there's a supply issue for the moment, but it's really the people, the labor being able to assemble the devices. So we'll get more information in the coming 4 to 8 weeks. And we think that as you get into late April, when Apple likely updates its earnings, we're going to have much better visibility. I think the longer term story, though, which is what we are most focused on, remains healthy.
Will, is there a negative outcome possible in the next 4 to 8 weeks, depending on what happens with the outbreak of coronavirus? Could all bets be off as something else? What would indicate to you, and what would that look like? How would that play out?
Well, look, we've taken a preliminary stab at what the coronavirus outbreak looks like for fiscal Q2, the March quarter. We did lower our revenue forecast below the low end of what had been the previous guidance, and due to lost leverage, took EPS down close to 10% on the quarter. Didn't change many of our longer-term forecasts. Look, to the degree the coronavirus, expands and becomes more severe on a global basis, and has a broader impact on, global demand, then yeah, that would obviously be something to take into account. But we're clearly not seeing that, today.
Well,
but I think to Daniel's point, it's going to be monitoring how fast do these assembly plants get up and running, and when do the stores in mainland China start to reopen?
Mohamed, everything rosy outlook, or that's the most likely outcome, that 4 to 8 weeks things settle down, we're back on track. What do you think?
So first, I worry less about Apple than about the bigger message, which is you are simultaneously disrupting demand and supply in the second largest economy in the world, and we've got to take that seriously. In terms of Apple, I would share the constructive long-term view, but I think it will probably change the way Apple does certain things. This is a wake-up call to lots of people around the world about over-dependence on certain segments in the global economy.
Well, but how is this the wake-up call for that versus the US-China trade war? Surely this is much more of a, we hope, one-off wildcard factor than the trade war, which has lingered on.
Because I think most people can explain the trade war. Here, there's so many uncertainties that you suddenly realize that you can get this exogenous shock. I don't buy the V-shaped. Everybody has built in a V-shaped. We come down the first quarter, we go straight back up the second quarter, and we look through all this. I think we're going to look back and say this is more either a U or some sort of W or L. This is not a V when it comes to the economic and corporate effects.
Karen, clearly last time they warned, 12 months or so ago, it was a great buying opportunity. Do you feel that this could be as well?
I think so. I mean, in the past, supply constraints, sometimes they lose sales to others. I don't see that happening here. I just see it as delayed. So, but it's this pullback isn't really that much considering it's an all-time high.
Right.